Crypto trading is like a wild roller coaster ride. The ups, the downs, the adrenaline. But what if you had a guide to help you navigate the twists and turns? Today, we're diving into the top 3 crypto trading tips that every beginner needs to know. These tips will not only help you survive the ride, but thrive in it. Let's get started with tip number 1. The market is a roller coaster. Don't jump off. Crypto markets are notoriously volatile. Prices can swing wildly within a single day, making it feel like you're on a thrilling yet nerve-wracking roller coaster ride. One day your portfolio is up and the next it's down. These fluctuations can be stressful, but they are a normal part of the crypto market. But just like you wouldn't jump off a roller coaster mid-ride, you shouldn't panic sell your crypto assets during a dip. Panic selling can lead to significant losses. Instead, zoom out and focus on the long-term trend. Look at the bigger picture and understand that short-term volatility is just a small part of the overall journey. Remember, in crypto, patience often pays off. Holding onto your investments through the ups and downs can lead to substantial gains over time. Tip number 2, diversify. Don't put all your eggs in one basket. In the world of crypto, it's tempting to go all in on a coin that's skyrocketing. The allure of quick gains can be hard to resist, but seasoned investors know better. They understand the importance of spreading risk. By spreading your investments across multiple cryptocurrencies, you reduce risk. This strategy helps protect your portfolio from sudden market changes. If one coin dips, others might rise, balancing out your portfolio. Diversification acts as a safety net. Think of it like a buffet. You wouldn't fill your plate with just one dish, right? You'd want a variety to enjoy a balanced meal. The same principle applies to your investments. Finally, tip number 3, timing the market is a myth. Be consistent. Many new traders fall into the trap of trying to time the market, buying low and selling high. They believe they can predict the perfect moments to enter and exit trades, hoping to maximize their profits. But even the experts get this wrong sometimes. Market conditions can be unpredictable, and even seasoned traders can find themselves on the losing end of a trade. Instead, consider a strategy called dollar cost averaging. This approach involves investing a fixed amount of money at regular intervals, regardless of the market's ups and downs. This means you invest a fixed amount regularly, no matter the market price. By doing so, you can avoid the stress and guesswork of trying to time the market perfectly. Over time, this strategy can smooth out the volatility and grow your investment steadily, just like planting seeds in a garden. Consistency is key. Just as a garden flourishes with regular care and attention, your investments can grow steadily with consistent contributions. So, there you have it. Stay calm, diversify, and be consistent. These 3 tips can make all the difference in your crypto journey. Ready to take control of your crypto investments? Hit that subscribe button for more insights, and let's ride the crypto wave together.